All right, welcome back, everybody. So here I've uploaded on the Google Classroom the second month's worth of transactions. So all I'm requiring you for now is that I want you guys to, so if you guys look, I've posted the trial balance. So if you want to know what happened, here it is. I've already did the work for you. So what all I want you to do is just to go through it and notice that I've already completed the unadjusted trial balance. So what we're doing today is we're going to complete the set of adjustments, okay? And then we're going to complete the adjusted trial balance. So as you notice, if you look at the general ledger, it's pretty much filled out in regards to a lot of the information. So if you go through the assets, like it's should be filled up to pretty much up to the unadjusted trial balance. So all you have to do is complete is the adjusted trial balance. Or the adjusted trial balance and do the adjustments. So here I've posted also the adjustments for the month of July. So we're gonna go through all of those and complete the rest of the scenarios. So first things first, my journal, I did not do the journal the entire time, so we're not going to be doing post references, okay? We're just going to skip that part while we go dive into posting to the ledger, okay? And I didn't do any check numbers, so we can just ignore all of that, okay? So first things first, though. We're going to do the adjustments. Can you guys see my screen?
Yes.
Okay, so I've also updated the chart of accounts. So if you guys ever need a reference on how to journalize anything, please use just the 7 steps of transaction analysis. Check your chart of accounts. If you think something does exist that normally it does not exist, right? It's updated to everything that is introduced into the second month, okay? So back to the general journal. The first thing is we need to adjust to reflect the insurance expense for Sergeant insurance for the month of July. So, like we've mentioned before, right? How do I recognize my insurance? How am I going to adjust my insurance for the month of July? How do I use insurance in this kind of sense?
Like expense?
Correct. Insurance expense. That's correct. Okay, what account number is insurance expense?
60400.
640000. Perfect. Okay. 60400. Okay. Now, do you guys remember way back when we purchased the insurance? If we purchased insurance, what did we purchase? We purchased a 12-month plan, right? So where did we put the rest of the 11 months? Okay, there's a couple hints that we can do here, right? We could check the subsidiary ledger to see how much we purchased the insurance expense for. Or second of all, we can check our assets, right? Because we own a part of insurance, correct? But where do we place that? Okay, so let's go. I'm going to go to my subsidiary first, go to my vendors. And who did I purchase this from? This is from Sargent Insurance. Okay, how much was my 12-month plan? So how much is it per month?
$195.83.
$195.83. Good. Okay. Now, if I bought 12 months, right? Where did I put the other 11 months? Right? We own the insurance, right? If we own the insurance, where would you categorize that if it's an asset? Prepaid accounts. Good. Excellent. So if I go to my ledger and I scroll down and I'm going to go to prepaid accounts, right? What does it say here? I bought 11 months of insurance right here. Prepaid insurance for 11 months. And that means I still have $12.50 left on it. Okay, so now I'm adjusting because now I've used my one of my months. So I need to adjust this so then it reflects that I still own 10 months left. So in this case, I'm taking it directly out from my prepaid accounts. Okay. Okay, and what account number is that? Okay. And here in my little description, I'm going to write that I am adjusting insurance for the month of July. Okay, so here I'm going to go ahead and debit my insurance expense because I used insurance for the month of July. Okay, so let me go to insurance expense. All right, here we are, insurance expense. So now it is, oh, wrong one. Oh, no, that's right. So here, it is the 31st, right? And then I'm going to go ahead and write insurance expense for July. Okay, and we are doing $195.83 because that's exactly how much it's going to cost me every single month, right? To for this month's of my insurance expense, right? We took the total value of my insurance and divided by 12, right? To give us the $195.83. So that's how much we used, right? And now I need to also adjust my prepaid accounts because I no longer have 11 months left. I only have 12 months. I mean 10 months left, right? So here, I'm going to write here, I'm going to write adjust prepaid insurance for July. Okay? Once again, no post reference because I don't have a journal yet. So in this case, I decreased or I credited my account for the 195.83 because that is what I used for the month of July. So therefore, I still have 10 months left. So if you want to put it in parentheses, 10 months remaining, you may do so as well. Okay, 10 months remaining. Okay, there's my insurance, and that's exactly how I properly adjust for my insurance for the month of July. Okay, so then the next scenario says that I need to adjust for rent expense for the month of July. So what am I going to do here?
Rent expense.
We're going to do rent expense. Good, because we used rent for the month of July. So there's rent expense, okay, which is account number 62,000. Good. Now my rent expense, okay, is for how much? Do you guys remember? So let's take a look at my let's take a look at my subsidiary ledger. Okay. We bought rent expense from landlord properties. Okay. Here we are, landlord's properties. How much is it per month for rent?
$1,500.
It is $1,500 for every month of rent. Okay? So once again, 1,500. Okay? All right? And what did you notice here? What did I have here in my ledger? I purchased 3 months, right? Or I'm sorry, 4 months. I bought 4 months worth of rent, right? So once again, if I go to my ledger, my general ledger, notice this. I wrote right here that I made an advance payment for 3 months worth of rent. Okay, that means I still have 4,500 left. So here I need to adjust this as well. Okay, so therefore, if I need to adjust it and reflect that I no longer have 3 months, right? I only have 2 months left because I used the month of July. So therefore, I'm going to journalize that I'm going to take away from my prepaid accounts because I've used my rent. Okay. For 1,500. And right here, for a month of July. Okay? So now let's go ahead and update our general ledger. Okay, so here I'm already at a prepaid account, so I'm just going to go ahead and plug this number in here. Right? Adjust prepaid rent for July, 2 months remaining. So here I'm going to credit my $1,500. So now my prepaid account has decreased from 8854 from 8658 for my insurance, and now it has dropped down to 7,000 for my rent. Okay. And then I'm going to go ahead and go to my rent expense here. And debit my account for $1,500. Okay, so is everyone good with me so far?
Yes.
Okay. So then, what has happened next?
Convert periodic inventories.
We got to convert our periodic inventory. So pull up your inventory worksheet. All right, so here we are. I didn't make that many purchases of coffee mugs for the second month. But we have beginning inventory, right? So let's go ahead and take a look at this. What did my scenario say? How many cups do I have remaining?
149.
We have 149 cups remaining. So that means my ending balance is going to be 149. Okay? Now let's go ahead, since it's the end of the, month, we're going to go ahead and equal up or my columns. So how many cups did I purchase overall?
300.
We purchased 300. At what total purchase price? $760. What was my total freight? 240. And what was my total cost? $1,000 even, right? And I already summed up my column up here, right? From the previous month, right? We had 106 cups remaining at a total of $386.12. So let's go ahead and plug in our numbers here, right? So if we purchase a total of 300 cups at a total purchase price of $760, right? Did we have any returns and allowances?
Yes, 10.
Yes. We returned 10 items at how much?
25.40.
Okay, so then what should be my subtotal now? If I had 300 and I returned 10.
9.
Yes, 290. And then same thing goes here. If I had $760 and I returned $25.40, how much should be my subtotal?
73460.
Good. Right? Once again, freight doesn't increase in quantity, but it does increase in price or total cost. So I'm going to add my 240. So at the end of the day, what should be my total net purchases for my total cost of net purchases?
97460.
Good. Okay. So now we have that there. Now, did I have beginning inventory? Yes, I did. Right? I had 106 items costing me $389.12. Or sorry, $86.12. Okay? So once again, I've already solved for my net purchase from right above, right? So I'm going to pull that information down. So then, what is my total goods available?
$396.
$396 at a total cost of
1361.
13. Oh, if you round it, yes, it's 1361. But if you expand it, 1360.72. Okay. Now let's go ahead and let's take a look at the very top of the window. What is my costing method?
Weighted average.
It's weighted average. So in this case, I'm going to go ahead and solve for my new average cost per item. Okay, so here, if I have 396 available at a total cost of 1306.72, what is going to be my average cost per item?
$344.
344 or 3.43 and so on and so forth. Okay. Okay. So now that we're going to solve for the next part, right? If we started out with 396 items and have a remaining of 149, how many items did I sell?
$247.
247. So once again, if I'm going to solve for this, right, I'm going to take my average cost per item. So what is my total cost that I sold? How much did it cost me to sell 247 items?
$848.73.
Yes, 848 and 73 cents, making my ending balance to be
511.99.
perfect. So there we are. We completed our little section here. So let's go ahead and journalize this real quick, okay? So first things first, if I'm journalizing my conversion, what do I need to recognize?
Inventory.
You need to recognize. Good. So specifically, what is my inventory item?
Ceramic coffee mugs.
Ceramic coffee mugs. Okay. Item, I believe it's like 14. 120.50. Okay. 120.50. Okay. What else do I need to recognize?
Cost of goods sold.
Cost of goods sold. So in this case, specifically, it's cost of goods sold what?
Ceramic mugs.
Yes. Cost of goods sold ceramic mugs. Okay. Which is account number 5150. So COGS. Okay. What else do we need to recognize?
Ending balance.
We have our ending balance right here already. Okay, so our ending balance, right? If we look at our worksheet, how much do we have left?
$511.99.
Good. How much should we sell? Right? We sold $848.73 worth of ceramic coffee mugs. Okay. What else? What other accounts do we need to recognize? What are we converting into inventory? Okay, if you guys remember my coffee mugs, right? When I purchased them, what did I place them as? What did I recognize my coffee mugs as?
Purchase expense.
Purchase expense, good. Okay. Okay. And of course, if I have purchase expense, what came? Yes, good. We had freight expense. Okay. Okay. So let's go ahead and take a look at that. Purchase expense should be
$61,000.
61,000. And then what about my freight expense? 6,300, right? Yes. I keep typing too many zeros. 61,000. There you go. All right. What was my total purchases?
$760.
Okay. And what was my total freight?
$240.
240. Okay. All right. If you sum up these totals, we are definitely missing a lot of money. Okay, so I'll do it here so you guys it can kind of help you figure out what else you need to include in here. So we got 1360.72 on one side, and we have a 1,000 on the other side. So what else do we need to recognize? Okay.
Taxes?
No taxes. Okay. You guys, this is chapter 5, right? When we convert our periodic inventory, right? What else do we need to recognize?
Beginning balance.
We need to recognize that we had a beginning inventory, right? So if we had beginning inventory, so again, ceramic coffee mugs, right? 1250. So how much did I start out with? What was my beginning balance?
$386.12.
386.12. Okay. So 386.12. Okay. So now I have 1360.72 and I have 1386.12. So what is my last component I'm missing?
Returns and allowances.
We had purchase returns and allowances. Good. So that's exactly what we have here, right? We have to think about it this way. We're going to calculate our total amount that we have available, right? Our total purchases, our total freight, and our total beginning balance. But what did we know? What happened to our purchase expense? We didn't purchase all 300 items. We made a return. We returned 10 items, purchase returns and allowances. Okay, and what that should be 61.
61,500.
61,500, and that's going to be for the total amount of what?
2540.
2540, and then boom. Now we both match on both sides with 1386.12. Okay. So that is it. This is exactly what we have to do, especially when we're converting our periodic inventory with beginning inventory, okay? So remember, this was chapter 5. Okay? And I'm going to write here, adjust for periodic inventory. Okay? So now that we have this, right, that means my inventory worksheet is completely done. so I can go ahead and close this worksheet out. Okay, so now that I converted everything right, let's go ahead and go to my ledger because now I need to update my ledger. So exactly how you see it, right? We're going to start off with our inventory item. So my assets, right? This is an inventory item. Okay, here we are, ceramic coffee mugs. I'm going to insert one more. Okay. So again, on 7/31, sorry, go back to it. So on 7/31, right? What was our first little thing I had here? What was my first entry here in my journal? Right? It was an adjustment. We had ending. How many cups do we have remaining? How many cups should we have remaining? 149. Okay. Which, in our case, how much did it increase by? Or what was the balance? 511.99. Okay. Since we're already here, what else do we need to also take out here? We need to adjust our beginning balance of 106 mugs. Okay? And we took away 386.12, okay? Which, if you did the calculation in your running balance, it should reflect that you should have $511.99 worth of coffee mugs. Okay. Next thing is the cost of goods sold. So cost of goods sold, we're going to locate our coffee mugs. Here we are, coffee mugs. Right? How many coffee mugs did we sell? We sold 247. Actually, let's double check that. Yep, 247. So we sold 247 mugs. And that cost me how much? Yes. Okay. We also got to zero out our purchase returns and allowances. So let's go to our expenses. I think if you go up a couple, here are my purchase returns and allowances. Keep hitting that button. Sorry, excuse me. Okay. Right? We debited our account for 2450 to 2540 to give our account balance now to 0. Right? Okay. We also have to zero out our purchase expense, right? So here's my purchase expense. 731 adjustment. Right? We credited my account because we're trying to empty out the bucket, right? We're emptying out the purchase expense. So if we're going to empty it out, we're going to attempt to zero it out. So in this case, it should be 0. Okay? And then last but not least, we got to zero out our freight expense. So freight expense, here we are. Keep going down one more. Freight expense, here we are. It is now 731, and we are making an adjustment, which we credited our account for a total of 240. So that should bring your account balance to 0. Okay. So there we are. We converted. We took our empty bin. We took our bins and we're emptying them out, right? So we're zeroing them out. And here it is. Okay. Everyone go with me so far? Okay. So then, what is next? What do we need to adjust now?
Cost of materials.
Yes, we have to adjust for the cost of materials. So here, I already did the calculation for you. Okay, so general journal, right? All we got to do is recognize what cost of materials we had. So as you notice, I bought more stuff. Okay, so therefore, we also sold more stuff. Okay, so let's go ahead and take a look at my chart of accounts. Okay, chart of accounts, right? Under cost of materials, right? What do you see here? We got cost of materials for our medium cups. We also bought medium plastic cups. Okay? We bought large coffee cups and we also bought large plastic cups. We have sugar, creamer, cream, and whipped cream. Okay? So let's go ahead and plug all of those numbers in. Okay? Because we're going to be calculating the cost of material. So, like I've mentioned before, I've already done the calculation for you. So this part's really, really easy. All we have to do is just journalize each entry here. So the first one is my cost of materials for my medium coffee cups. So how much did I use? $59.47. Okay, so I used up 5,947 cups, which cost me a total of, yes, 321. Okay, 321.88. Okay. All right. Let's look at my chart of accounts. What was the cost of materials for this one? $51,200. Okay. Okay. The next one's 51,300, 51,350, 51,400, 51,450. Okay. So let's go ahead and take a look at this. So we had cost of material for my medium plastic cups. Okay. How much did I use? 650.58. Okay. What about my cost of materials for my large coffee cups? Okay. 480.08. Okay. What about the cost of materials? Cost of materials for my large plastic cups. $904. Okay. What about my cost of materials for my sugar? 132. Oops. 13248. What about my cost of material for my creamer? Okay. And in this case, I bought some heavy cream. So cost of materials for just the cream. How much did I use? Or how much did it cost me? Ooh, hold on. Wrong. Creamer is 1126.77. My cream is $1.99. And then here, what was my cost of materials for my whipped cream? Okay. Now, if I'm adjusting my cost of material, where am I directly taking it out from? If I used all these materials, where am I taking it out from?
Business supplies.
Business supplies, okay? So good. So list out every single business supply that we have. Right? We have our medium coffee cups, right? We have medium plastic cups. We have large coffee cups. We have large plastic cups. We have sugar. We have creamer. Right? We have heavy cream. And we also have whipped cream. Okay? So let's take a look at our little chart of accounts and take a look at our business supplies. So out of all of those business supplies, right, what are my account numbers going to be? Okay. Like I said, I don't know if these are right. And my whipped cream should have been 11,785. Okay, 11,785. Okay. And once again, because I've calculated how much it's going to be, how much it cost me to sell these items, they're going to reflect everything the same. So that means I need to take away that much out from my coffee mugs. I need to take away this much, I'm sorry, from my medium coffee cups. I need to take this much from my plastic cups. This one from my large cups. This one from my plastic cups. This much from my sugar. Right? This one from my creamer. This one from my heavy cream. And this one for my whipped cream. Okay? And I'm going to go ahead and write here, adjusting for use of business supplies. Right? So let's go ahead and make our adjustments. Okay, I'm going to start off with cost of material first. So go to your ledger. Cost of material, here we are, cost of goods sold. Okay. First we have here is our medium coffee cups. Okay, how many cups did we use? 5,947. Okay, for how much?
Three to 180.
Good. Okay. What about our plastic cups? Yes, we used 60/10. Okay, at how much? Okay. How many of the large coffee cups did I use?
$59.13.
Okay. Which cost me a total of
480.48.
Mm-hmm. Okay. What about my large plastic cups? How many did I use? Okay. At what price? How much did it cost me? 900.04. Okay. How many pounds of sugar did I use?
368.
Okay. Which cost me a total of 132.48. Okay. How much creamer did I use? How many cases did I use?
69.
Cases.
Yes.
Yes,
69.
yes, 69. Okay. Used 69 cases. Okay, which cost me a total of
1126.77.
okay. How many cartons of cream did I use? I think I used 100 cartons.
100.
Okay, which cost me total of 199. Okay. And then lastly, how many cans of whipped cream did I use? I used
200.
200 cans, costing me 258 even. Okay. Now I need to adjust my business supplies. So we'll go to my assets and I'm going to head on over to my business supplies, which should be above my inventory. All right, we're going to start from the very beginning, right? For our medium coffee cups. So once again, all right, how many cups did I use? 5147.
59.47.
Okay, if you want to and you've already calculated, you can calculate whatever you're remaining. Okay, but you could also do that for the next month if you plan, if you know, whatever it is, right? So if I used, how much did I use? Three, two, 188.
80.
Yes.
So therefore, I should have remaining $95.05. Okay. Here, I used 10 cups, right? For a total of
58.
Mm-hmm. And look, I went over by $1.08. Now, a little context. I in the business, I sent out Albert to go buy some cups using the petty cash money. So this is okay for now. Okay. We'll complete it later on. So I have a negative $1.08 in my medium cups, medium plastic cups. Okay. What about my large coffee cups? How many did I use?
59.13.
59.13, which cost me.
480.
So I should have a remaining balance of $223.75. Then here, for my large plastic cups, how many cups did I use?
543.
95.43.
No, 55. 5543.
Oh, 55. Okay, perfect. Excuse me.
Bless you.
Okay, excuse me. All right. So how much did it cost me?
900.04.
904, which gives me a remaining balance of $74.21. Okay, how much sugar did I use?
368.
Okay, which cost me a total of
13248.
132.48. Oops, I put it on the wrong side. So 13248, which should give me a remaining balance of $33.12. Okay. Here, 730. How many cases did I use?
69.
Okay. Which cost me a total of
1126.77.
so I should have a remaining balance of 277.61. Okay. How many cartons of heavy whipping cream did I use? Or heavy cream? Sorry, not heavy whipping cream, just heavy cream.
100.
Which cost me $1.99. Okay. So I should have a ending balance of $49.75. And then we also used
200 cans.
right, which cost me a total of $258. So I should have remaining $64.50. Okay. All right. Everyone go with me so far?
Yes.
All right. So then what has happened next?
Receive bank statement.
Okay. So in this case, my business did well. No NSF checks, nor did I overdrafted my bank account. So in this case, how much was my bank services?
50.
It was just 50. So what account am I going to use to recognize my bank service charges?
Bounty.
Bank fees, correct. So bank fees, which is an expense account. Okay, so bank fees. What account was my bank fees?
60100.
60100. And where does this come directly out from? Where does it directly come out from?
Checking.
Yes, and it's going to be automatic, right? Just because they send you a bill, they're automatically going to take it right out from your bank account. So checking 10-100 for a total of $50. Okay. And then I'm going to write right here. Bank service charges. Okay. So now we're going to go to my ledger and recognize a few things, right? We're going to go expenses. Go up to bank fees. Here we are, bank fees. Bank service charges for $50. Okay. Then we're going to go to our checking account because they took us automatically $50 for my bank service charges. 731 bank. Okay, so that means my running balance should now reflect that I should have 13,948,942. Okay. So we made a lot of money in the second month. Okay. All right. So let's see what happened next. So what happened here?
Got it from the Visa credit card.
Mm-hmm. Good. So here, right, we retrieved it from online, right? They produced the statements almost instantly. And we recognize that right now, we currently owe $4,977.49, right? The interest was 18%, which they charged us $74.67. And lastly, that makes our total current balance to be $5,052.46. This bill is due on the 10th of August. Now, typically, most statements, they usually send it to you at least a couple days in advance, and they kind of give you like extra time to pay it off. But also, second thing is you should be able to have access to your credit card statement at any given time. So you should be aware that you should be getting a statement anytime soon, and it's going to automatically charge you the interest. It's also going to give you your minimum payment due, and it's also going to recognize when it is due. So just because your statement gets in, you receive your statement either maybe like a day before your it's actually due, you should automatically know by either online banking, or you should have already associated your monthly payment date with your credit card company, right? You can always set that date to be at the specific date. So in this case, I set it up so that at every 10th of the month, my statement is going to be, my bill is going to be telling me how much I owe, right? I don't need to wait till the paper comes and arrives to be able to recognize how much is due. So in this case, I'm not going to pay it yet. I'm going to wait till till that date, which is the 10th, okay? However, what does it say here in the note here? It says that we need to accrue the interest expense for this credit card, okay? And assume we are willing to pay off the entire credit card balance statement on the due date. So that means we're going to pay the full 52.46, but we need to recognize our separate cost for the $74.67. However, we're not paying it yet. We're going to pay it later, right? We're going to pay it on the statement due date, which is August 10th. So that means there are a few things that we need to recognize, right? First, we got to recognize that we have a bill, okay? We also got to recognize how much interest we're going to be paying separately, because interest expense is separate from what you actually owe. It's what you accrued for owing this much money. So in this case, let's go ahead and take a look at our chart of accounts. We're going to recognize that we're going to convert this statement into a bill, okay? We're also going to recognize how much interest we're going to pay. So, what accounts will I be needing to use? Say that again.
Interest.
We're going to use interest expense. Good. Accounts payable. Good. Okay. So let's go ahead and attempt to journalize it first off. Okay. So first off, what are we paying off? Or
Visa.
yes, thank you. Thank you. Okay, so you understood what I was trying to say.
Mm-hmm.
We received a bill, right? Therefore, we're going to reduce the the Visa payable because we're taking and we're gonna plan to pay it off. So we need to recognize we're gonna reduce our Visa payable. For how much? Okay, I'll skip that question for now. What else do we need to recognize? Right? We have our bill for how much that we owe on the credit card. Okay? So what comes separate from the actual credit card?
Interest.
Interest. Good. Okay? Let's take a look at our chart of accounts. We have interest expense, right? Interest expense. Interest expense right here. Okay, interest expense, Visa Gold. And what account number is that? 60415, right? Okay. And then we recognize that we're going to utilize it as a payment. Okay, so here, okay, accounts payable for my 20,000. Okay, now here's one thing we have to do. Interest is separate from my actual amount that I owe, right? It's a separate payment. Now, in this case, I'm accruing for how much I owe for interest. So in this case, we're going to be also recognizing interest payable, okay? Because we owe interest on a separate account, okay? So let's look at our chart of accounts. What account number is my interest payable for? Yes. 27500. Okay? So now how much is my amount that I owe for my Visa credit card?
49.77.49.
Good. How much is my interest?
74.67.
Okay? Same thing here, right? I only owe this much on my credit card. Okay? And I need to pay my interest separately. Even though it's together in one bill, I need to recognize this difference, okay? Because I have a separate cost. It's not part of the amount that I owe for my credit card. It's a separate cost that I need to recognize, okay? Because Just like interest income, right? Or interest payable, right? It's completely separated from my actual amount that I owe. So in this case, I owe $74.67 to the credit card company for interest. Okay? And then I'm also going to write here accrue credit card interest and bill payment. Okay. All right, there it is. So now I'm going to go ahead and plug these numbers into my general ledger. Okay, so first things first, I have Visa payable. Okay. I'm going to recognize that I received a bill, or I guess credit card bill. Okay. And I'm going to recognize that I'm going to pay off the entire credit card account balance, right? Okay, so this one my formula didn't go through. Okay, I'm on the wrong side, that's why. Okay. Four 97749. There you go. So now I shouldn't be owing anything on my credit card because I'm going to pay my credit card off. Okay? Full balance. And I'm going to recognize it here because I owe it. Right? I'm going to recognize that I owe this because I'm accruing it because I retrieved the bill from the online. So for 497749. Bringing my account balance now to be 497749. Okay. I'm also going to accrue the interest, right? Because once again, interest is a separate payment. It has nothing to do with the credit card itself. It's just based on the terms that you applied for, right? So you need to accrue that. You really didn't owe the 74 on the credit card. You owe that due to interest. So once again, here you go. Interest payable. I'm going to recognize that this is 18% interest on Visa Gold. Okay. And I'm going to recognize it for the $74.67, right? Because I owe that amount. Okay. And last but not least, I'm going to go to my expenses and I'm going to accrue that under my interest expense Visa payable. Or I'm sorry, Visa Gold. Okay. $18 interest on Visa CC for July. Okay. And it's for the 74.67. Okay. So therefore that should bring my account balance to be 102.96. So here I've already accrued the interest for my June, right? Because usually when you typically apply for a business credit card, usually your statement won't come until later into the second month. But like I've mentioned before, you can always check your online statement at any given time. And we made an agreement that it is going to be due on every 10th of the month. Okay? So I have that now. Okay, is everyone good now? Everyone good with me? Okay. So then let's see what else did we also receive. Okay, we retrieved a bill from the bank of from the main bank for the truck loan. Okay, so once again, this one is due on uh, August 20th. Okay, so we received it early on. We received it at the end of the month. We recognize that we've already made a payment because if it's due every 20th of the month, that means we already made our first payment, right, on July 20th. So here's another one that we need to consider as another thing that we have to owe. We are our payment plan is that we finance the car. So that means every single month you are expected to pay $849.81. So this is already given in standard. So every bill that you receive, you should know that you have to pay, obligated to pay $849.81. That's the payment agreement terms. Yes, you can pay more, and yes, but for now, we are going to keep at our pace and make sure that we make our monthly payments of $849.81. So every month, of course, your statement's going to look different, right? Because every month you're going to have a different statement balance, right? A different balance, and you're going to be charged your interest differently. Now, if you guys remember from our lesson back in understanding how bank loans work, this is already calculated for you. All right? Especially when you're doing a bank loan or some kind of type of loan. Interest is already calculated for you, and it's calculated already in the price that you owe. So every payment that you make, it's including the interest already. Okay? So now we have to do this. It says here that we also need to accrue the interest expense for the month of July for this truck loan. Okay, so here, this is how much our statement balance is. This is how much interest we're going to be accruing. And this is the total bill amount that you owe on the current statement. And then this is my monthly payment. So we're not going to pay it yet. We're going to wait till the 20th to pay. So we're going to recognize this bill that is an obligation that we must pay. So let's go ahead and do this once again. So I'm going to reduce my truck loan. Okay? Because this is my bill. Okay? Once again, interest is completely separate from my actual car that I owe, right? It's extra money I owe because I borrowed money. So I need to recognize interest expense. And then if you look on your chart of accounts, you should have one for loans. Okay? Then we're going to recognize that we're going to be owing money, right? Because the bill that we're paying is going to be for, I just put accounts payable, because we're going to be recognizing how much we owe on the truck loan, but we also need to recognize that we owe money for the interest separately. Okay? So once again, what account number is my truck loan?
So 8020.
28020. Oh, wrong one. 28020. My interest expense 6450. I think it's 420. 6420. Chart of accounts, interest expense for the loan. Interest expense for the loan is $64.20. Okay. Accounts payable once again is $20,000, and my interest payable is going to be $27500. Okay. So once again, how much am I gonna owe? How much is actually gonna go towards my actual loan? Right? If I'm gonna pay a total of $849.81, how much is actually going to be paid to the actual loan? What actually goes towards my actual interest? Or I'm sorry, my, what do you call it? Principal. Anybody?
778.70.
Okay, so if I take my 849.81 and I subtract out my interest of 71.11, that means 7,870 is going to actually go towards my actual payment to the actual loan, right? We also have to encounter $71.11 of interest. Okay? Same thing here. This is what I actually owe on my truck. And this is actually how much I'm going to owe for interest. So once again, I'm going to write here accrue accrue loan interest. Okay. And accrue interest for loan for truck loan and bill. Okay. So once again, I'm going to go ahead and go to my ledger, and we're going to plug these numbers in once again. So starting with my expenses, here you go. First thing I'm going to recognize is at the end of the month, I'm going to be accruing 3% interest, which was $71.11. Okay. And I'm going to go to my liabilities. Okay. First thing here I see is that I'm already in my interest expense. So I'm going to go ahead and recognize that I have 3% interest on loan for $71.11. Okay. I'm also going to go down below because here's my loan right here. I'm going to recognize that if I do make this payment on my truck loan, this is actually how much that's going to go towards my principal. So here you go. I'm not going to write anything in there, but I'm going to go ahead and recognize that if I were to make this payment, it's only $778.70 is actually going to go towards my principal, which, again, I put on the wrong side. 778.70, which should reduce my truck loan to be down to $27,666.44. And we're going to recognize that this is my bill for my truck loan. I need to write bill for okay. Same thing here. I'm going to recognize that I'm going to be owing $778.70. Okay. Okay. All right. So right now it's 10:08. So I'm going to stop here for now, and then we're going to go on a break real quick, and we'll continue on after that, okay?